Hi, welcome back to the Constant Sports Friday 5, where every week we're going to break down the big sports business stories shaping the industry and explain what they mean from the constant sports perspective. And so we've seen a lot of athlete economy, athlete investing moving, and so we're seeing that just evolving day by day, really. We're moving beyond just what it used to be with these simple endorsements into a world where athletes are really becoming these cultural brands themselves, capital allocators, investment vehicles, really just all in growth engines for themselves. Obviously, the entities that they operate with and inside. And so here are the five stories that we're going to get into. In story number one, Tommy Hilfiger signs Travis Kelce. Travis Kelce has been on a whirlwind the past few years, Super Bowls, dating Taylor Swift. He's all over the place with his brands and endorsement deals. And so Tommy Hilfiger signed Travis Kelce as a global ambassador and creative collaborator. So, as we said, this is a real movement towards the athlete cultural IP. The best brands are doing these deals where, it's not just here's a campaign, here's a hoodie. They're trying to build a multi-year cultural story within the athlete around their identity, audience, and relevance. And especially as he's going probably on his last year in the NFL, really getting that relevance era and audience. And so, he's going to sit at the intersection of sports, pop culture, fashion, entertainment. So it's a good play for them, obviously, as they're trying to get this more attention. And like I said, the athletes with the best partnerships today are less about promotion and more about building, that whole ecosystem. Story number two is Malcolm Jenkins launches an investment firm, longtime NFL player, going into the investment landscape. And so we're seeing athletes moving from a lot of these paid faces to actual capital allocators. This matters in a few ways where they can kind of create this value is, instead of simply appearing in the ad, the athletes are now buying the equity, structuring the deals, building portfolios, and participating in this real ownership. Frankly, that's where a lot of the long-term wealth is going to get built. The endorsement era kind of created this cash where the ownership era creates an enterprise value. And athlete wealth is maturing from income to now infrastructure, we're seeing. And story number three, Whoop raises $575 million at a $10.1 billion valuation. And at this point, Whoop is not just a wearable company, it's a health recovery, longevity platform, behemoth. These wearables are really much more than the kind of this small sports performance product for the elite athlete. They're evolving to these subscription businesses, wellness ecosystems, biometric data engines, and eventually healthcare adjacent platforms here in the future. And so investors clearly believe where this is heading. And speaking of athletes, Kevin Durant made a crazy return on his investment, doubled down. I think he might have even tripled down on Whoop. And so he's going to see a big return on that. And so this wearable category is shifting from fitness gadget to life optimization business, which is good to see. Staying in that category, Create Wellness raises $20 million, and that's adding to the growing wave of capital flowing into supplements and performance nutrition, because what used to be kind of this sleepy commodity category is now becoming highly branded, premium positioned, athlete adjacent, deeply tied into performance identity. And so this Cree team was really just opening the wedge. Now this much bigger opportunity has presented itself where consumers, they want the products that help them feel like participating in a higher level of performance and lifestyle. And they'll do that just here with the athletes, obviously, too. And so modern wellness brands are going to win by selling this performance identity and not just the product. Story number five is flag football's business upside gets real with the NFL and the 2028 Summer Olympics. We're seeing this big move, and now Tomorrow Sports getting involved, where investors love this huge participation upside with the youth and school adoption, media, the Olympic relevance, sponsor friendliness, lower legacy cost structures, and then really it's just kind of this big evolving movement towards flag football, and with this football's familiarity without football's baggage. And so these new properties going to be much more scalable. Flag football checks a lot of these boxes where, and we think it might be one of the most investable participation sports in the market today, especially on the women's side as well. And so closing out, the sports economy is moving beyond games into capital, identity, health, and scalable participation. And we do these sports business breakdowns every Friday, so make sure you're following Constant Sports. I'll see you guys next week.